Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letters CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello, thanks for joining me today on this chilly weekend day. If that's when you're listening, because you could be listening anytime if you went to my website at reversemortgageradio.net and clicked on Reverse Mortgage Radio up in the upper right-hand corner, you could download the podcast. So if you can't listen to the whole show, you know you're going to be leaving in 5 minutes or something, then you can visit me online next week because the show will be up there next week. But my name is Bruce Simmons. Like I said, you are listening to Reverse Mortgage Radio, and we're kind of picking up today's show where we left off last week. If you remember last week, now, if you didn't listen to it last week, you can go back to my website and listen to it there, but it's not required for you to listen to that show before listening to this one. Every one of these questions, we're talking about frequently asked questions of reverse mortgages, kind of is a standalone. However, last week I mentioned that one of the questions that I didn't have time to get to was what happens at the end of the loan, because that's a very common question. There are a lot of misconceptions about that. A lot of people think that the bank will take the house, and that's not true. That's not the way it works. But there's a whole lot of people who think that that's what happens, and that is just flat out not the case. So we're going to answer that question as well as a number of others today. But if you have any questions about reverse mortgages, please feel free to give me a call. I'd love to talk to you about your specific situation, see if we can do something for you. My number is 303-467-7821. 303-467-7821. My name is Bruce Simmons. I'm the Reverse Mortgage Manager for American Liberty Mortgage here in Denver, and I've been specializing exclusively in reverse mortgages for 21 years now. Starting this month is my 21st year. So actually, it's I'm beginning my 22nd year. I've been doing it for 21 years now. Since January of 03 is when I started, and I began in 03 with the Evil Empire. I'm not going to say who they are. They like stagecoaches. But other than that, that's the only thing I'm going to say. And I've been with my current company since 2011 now. What's that, 23? I'm at 13 years. I'm going on 13 years because it was September of 2011 when I joined them. So it's been 12 and a half years or thereabouts that I've been with American Liberty Mortgage as the reverse mortgage manager there. But again, my number is 303-467-7821. Feel free to give me a shout. I'm going to pick up where we left off pretty much. What happens at the end of the loan? Like I said, that's probably one of the most misunderstood processes. Now, I don't have somebody from servicing here today. I may do some kind of webinar. This year, one of my goals is to do webinars and record them, like 30-minute webinars, and maybe take that content and get it on the radio as well. So I can do kind of simulcast YouTube and the radio show with interviewing different people. But that's one of my goals this year. So it hasn't happened yet. Today, we're going to just talk about, and I'm going to be the one answering the questions. So what does happen at the end of the loan? If you've got a reverse mortgage and you pass away, what happens to the house? In fact, a friend of mine, he just passed away. He was in my Kiwanis Club with me, and I'm talking to his daughters about that. So that's one of the processes that I help people with. You could have your adult children contact me, put a note on the file. Please call Bruce Simmons when this happens. Or if you have to leave the home. There's something called maturity events. Let's just get right down to it. A maturity event is something that causes the loan to come due. So what causes the loan to come due? Number one, if you do not pay your property taxes, the loan will be called due. However, you can make that payment up. So you can't make the payment, you let the taxes lapse, the lender, the servicing company, will pay the taxes on your behalf. And they'll contact you and they'll say, hey, Mr. Jones, you need to pay your taxes. And you say, I don't have the money to pay my taxes. Well, they'll work out a payment arrangement with you. You have to stick to that payment arrangement. If you fail that payment arrangement and you don't keep up with it, I think you might get a little bit of leniency once. But if you don't get it paid, they're going to have to foreclose. The lender doesn't have a whole lot of discretion. It's based on HUD guidelines. HUD is a Housing and Urban Development. They're the ones that set the rules through FHA, the Federal Housing Administration, on what the lender has to do. If the lender does not follow these rules to the T, they could lose their mortgage insurance protection. Mortgage insurance is something that's on all FHA insured loans. It's on reverse mortgages too, and that's a question. We addressed it, I think, last week about why is there mortgage insurance, and one of the reasons is it protects the lender. You say, wait. I'm paying mortgage insurance. You're actually being charged mortgage insurance. Okay, I'm being charged mortgage insurance to protect the lender? Yeah, because by protecting the lender, that indirectly protects you, your estate, and your heirs. Let's say the way the reverse mortgage works, is that the interest gets added on to the loan balance. You're not required to make a mortgage payment, but you're still charged interest every month. Actually, interest and mortgage insurance. As that loan, every month, that charge gets added to your loan balance. So your loan balance gets bigger and bigger and bigger. And I always tell everybody, you get this statement in the mail and you're going to see two charges on it. One is for interest and one is for mortgage insurance. As that loan balance gets bigger and bigger, you have to be okay with that. And if the benefits of the reverse mortgage are not greater than the ill feelings that you get when you open up that reverse mortgage statement and you see that and it causes you some consternation or some concern, then you should not do a reverse mortgage. I tell everybody that before I do the loan for them. You have to understand that amortization schedule and how the loan balance grows over time. Now, odds are you're never going to end up owing more than the house is worth, but there were people who did back in 2008, 9, and 10. Now, the biggest reason that they did, well, a combination of things. We loaned a whole lot more money as a percentage of the value of the home back then than we do now. We're loaning probably half of what we loaned back then to people. So that's one thing right there. The other thing is there's a lot more restrictions now on appraisals. There's no puffed up appraisals. Back then, there were appraisers that would value a home at $300,000 when it was really $200,000. A realistic appraisal, they could have added 20, 30, 40, 50% of the value. Some appraisers are. Now there's a whole lot more restrictions on that. And these are some of the improvements that we've placed that FHA and HUD have put in place through the loan process. Okay, we're going to talk about that too as far as financial assessment goes, because that's one of the questions we're going to address. But the mortgage insurance pays the lender if you ever end up owing more on the home than it's actually worth. So the lender doesn't lose any money. They're not going to come after you, your estate, or your heirs if you end up owing more on the house than it's worth. Okay, so you can never, ever, ever leave a debt beyond the value of the home. However, like I said, they set the rules. HUD does. And if you don't pay your property taxes, you will be foreclosed upon. If you don't keep the home insured, you will be foreclosed upon. If you leave the home permanently, you will be foreclosed upon. Okay? If you pass away, then you may or may not be foreclosed on. Okay? Because your heirs will inherit the home in that situation. Whoever you name, whether it's a charity, your son, your daughter, your niece, your lawyer, whoever, that person inherits the home. They've got 6 months from the date of the close, the date you permanently leave the home, to either sell the home or refinance it or pay it off with other proceeds. The lender does not want your home. They just want to get paid, the balance plus all the interest that's due. Okay? Now, there's a caveat to that 6 months. Number one, HUD does allow up to 2 90-day extensions. So you could have up to a year to sell the home or refinance it. But you have to be doing something, okay? So between the 5th and 6th month, If you have not put that home on the market, they're not going to give you an extension. But if you've had it on the market for 3 or 4 months now, and month 5 comes and you've already reduced the price twice, and you're saying, hey, I'm still trying to sell it. There's still equity left. We want to sell it, but we want to get top price. They're going to help you out there. Or if you've got an offer on the property, but you're working through the details, they're going to give you the benefit of the doubt on that. Now, you don't automatically get that 6 months, though, the initial 6 months. You can't say, okay, mom passed away. We've got 6 months. Let's just take a deep breath here. No, you can, but you need to contact the servicing company within the first 30 days. You're going to get a letter in the mail. It's it looks like a demand letter or a foreclosure letter. It's a sympathy letter as well, too. So they say, we're sorry about your loss. A big bank, sorry about your loss. Who knows? But anyways, the loan is due. Please contact the office. If you don't contact them to let them know that you're trying to get the house sold or you're trying to refinance it, whatever it may be, they will have to foreclose. Okay, so they need communication. Keeping those lines of communication open is imperative. Okay, so the bank does not take your home. The heirs inherit it. Now, they can either keep the home or they can refinance it. Really, there's 2 questions that they have to answer. So your heirs inherit the home. Number 1, is there equity left? And number 2, do they want the home? If there's equity left and they want to keep the home, they can just go get a new loan and refinance it. Okay? They need to get the home in their name as soon as possible so they can refinance it. If there's equity left and they do not want to keep it, they list the home for sale and get it on the market as soon as possible. I tell people, sign a listing agreement with a real estate agent even before you're ready to list the home. Tell the agent, don't put it on MLS yet. Don't tell anybody it's not for sale yet because it's not ready. But you need to have a listing agreement as soon as possible. Now, okay, let's talk about what if there is no equity left in the home. Okay, let's say the home is worth $500,000, but $600,000 is owed on the house. Again, ask yourself the question, do you want to keep the house? Yes or no? That's the main one. So we answered the previous question, there's no equity left, but you do not want to keep the house. You clean out the house and you sign what's called a deed in lieu of foreclosure. It doesn't matter, the foreclosure is in the title, but it's not going to affect anybody's credit. You just sign the house over to the lender, and then the lender will sell the house for whatever they can get for it. And if they lose money on the deal, then they end up filing a claim with the mortgage insurance that we just talked about. They will not come after you or anybody else or the estate. Okay? That's if you do not want the house. But what if you do want the house? Let's say your grandpa built this house with his own 2 hands and $100,000 more is owed on it than it's worth. You can still keep the house upon transfer from your parents to you or however you inherited the house. There has to be this transfer, though. You can go get a new loan for 95% of whatever the value of the home is. So you go get a new loan for, what is that, $475,000, and you can keep that home, even though $600,000 is owed on the house and it's only worth $500,000. You can keep the home. The lender has to accept that, and then they'll file a claim with the mortgage insurance company for the loss. So you can keep the house, even if more is owed on it than it's worth, without having to pay the whole balance. Okay? Next, well, wait, let's back up. I know I've spent a long time on this one topic, but what if there's a non-borrowing spouse? We addressed that question in the previous show last week, how a non-borrowing spouse works. But that non-borrowing spouse can keep the home as well. If you were 55 and your spouse was 70 when your spouse did the reverse mortgage, now let's say you're 65 and your spouse has passed away. You're 65, but you're still considered a non-borrowing spouse for this loan, even though you're over 62. You inherit the home. You can continue to stay there. You have to get the home in your name. That's why I always recommend, if you're a non-borrowing spouse, do not take your name off title to the house. Keep your name on title. That way you can show, yes, the house is in my name. It's still your responsibility as the non-borrowing spouse to continue to pay your property taxes, homeowner's insurance, live there as your primary residence. You have to maintain the home and keep your name on title. And also, you cannot have, let's say, had a separation. If you were separated at the time your spouse died and you were living in a different residence, you can't move back to the home and say, hey, I've been living here. Because there are paperwork, there's a form you have to sign saying that you've been continuously living in the home. Okay? So even though no divorce was filed, you say, well, how are they going to know? If you're willing to lie, they may not. But I don't recommend that. Okay? But you can continue to stay in the home as long as you didn't already leave and say, hey, this is my new place is across town. All right, so that's the non-borrowing spouse part. The other question I get too a lot, I've got a trust. My home is in a trust. Can I do a reverse mortgage? The simple answer is yes, 99% of the time. Okay, even with an irrevocable trust, it's possible. It's a little more complicated. There's a little extra cost with trust because we have to have an attorney review it. And this is one thing that you have to remember too. If you have a reverse mortgage and you want to put your home in a trust, you're transferring property. You're transferring that home from your name to the trust. That has to be approved by the lender before you do that. So it's allowed, but you have to get authorization. The lender needs to make sure that that trust that the property is going into is FHA eligible. They want to make sure it's approved. And there may be some little tweak that the attorney says, oh, well, you need to change the wording here, or you need to make sure that the name of the trust is this way, which was the original name or the revised name. All these little legal mumbo jumbo things. But you can do it in a trust 99% of the time. There is something called counseling with reverse mortgages, not because people think you're crazy to do a reverse mortgage and you need mental counseling. No, you need housing counseling. There are specialized reverse mortgage counselors who've gone through courses and classes to learn about reverse mortgages and make sure that you understand what you're doing, that you're not getting taken advantage of, because seniors as a group are a protected class, okay? And they want to make sure that you understand what you're doing, that you're not getting bamboozled, sold a pig in a poke or whatever, like my dad used to say. They want to make sure you understand that how the loan works, the loan stays in your name, what your responsibilities are as far as maintaining the home and paying the taxes and insurance, all that stuff. You have to do that before you can, technically not before you can sign the papers for a reverse mortgage, but you have to do it before we can order any services for the reverse mortgage. For example, I knew rates were going up last week. A little bit. They went up like 1/8%, which meant a little less money. It meant about $3,500 different for this one customer. She didn't have her counseling done yet, but we went ahead and had her sign the papers beforehand, and she's working on getting her counseling now. I can't do anything on that loan without her first getting the counseling. 95% of the time, 98% of the time, I require my customers to get the counseling before they sign any papers. But it's not always required. It really is not required before you sign the papers. It's good practice. But the counselor just wants to make sure you understand how things work and how it all works and that you're responsible for it and things of that nature. Okay? Now, let's talk real quick, too, about financial assessment. I mentioned that before. And financial assessment is basically how we qualify you credit and income-wise. You say, wait a minute. No payment is required on this loan. Why should I have to qualify? Yeah, no payment's required. You're not testing my ability to pay you back. That's true. However, we do have to make sure you have the ability to continue to afford to live in your home. If you cannot afford to pay utilities and taxes and insurance and still have some money left over for groceries and living, then it's not a sustainable solution for you. The reverse mortgage will backfire, and you probably will end up not paying your property taxes at some point, whether next year or 2 years or 5 years down the road. Something happens, your car breaks down, now you don't have the money to pay your taxes, you don't have the money to get your car fixed, and you let the taxes go. And what happens now? You end up getting foreclosed. Why'd you get foreclosed on? Isn't it obvious? Because you had a reverse mortgage. That's what the news media says. No, that's not why you got foreclosed on. You got foreclosed on because you did not pay your property taxes. It doesn't matter if you own your home free and clear. If you don't pay your property taxes, you will get foreclosed on. Okay? So it has nothing to do with a reverse mortgage, but that's the institutional risk that we do not want to take, and we don't want to have to foreclose on you. We'd rather have you sell the home now and get out from under all your debt than to have your home foreclosed on and have us owning it and all this stuff. It would be a pain in the neck. By us, I mean the reverse mortgage industry. My company doesn't foreclose because we don't service reverse mortgage loans. But it's just not a sustainable solution if you cannot afford to live in the home. That's why we have to verify it. Now, there are people who can afford it. Let's say we pay off your existing mortgage and you can afford it, but your credit sucks. You haven't paid anybody since for the last 15 years. You've got charge-offs and all this stuff. Now, then we're going to require, we could still do the loan for you. Okay, it's very possible we could still do the loan, but we're going to have to take some of the money that's available to you and set it aside because we're going to take responsibility to pay your property taxes and insurance for you. If you're in your mid-60s, we may have to set aside 20 years of estimated taxes and insurance expenses for you. That can be $100,000 or more. That means that you have to have a lot of equity in your home if you're in that situation. Okay, so that's why we have to verify you pull credit and verify that you have enough income. One question I've been getting when rates have gone up is, why should I do a reverse mortgage now? Why not just wait to do a reverse mortgage when the rates come down? I get more money. Well, that was what a number of people thought there at the end of 2022 when rates first started going up, and everybody thought rates were going to come down in 2023. Guess what? They didn't. Imagine that. These prognosticators did not understand that rates were going to go up. In fact, I said that I thought rates were going to come down too. I'm no good at projections or predictions. So I try to stay away from it. But whatever everybody was saying, this is the way I classified it, was that the sources I was listening to were saying rates were probably going to come down. Well, they didn't. Now they're saying they're going to come down in 2024. What if they don't? What then? So the people who maybe they had enough money to pay off their mortgage, but they only had $10 or $20 or $30,000 left over in a line of credit. They were thinking they were going to have $100,000 left over. But since rates had gone up some, they're like, well, I'll just wait till rates come back down. They didn't. They kept going higher and higher and higher. And that just eroded the amount of money we could loan to people, because the higher the interest rate is, the less money we can loan as a percentage of the value of your home. Back in 2021, 22, before they started raising the rates, if you were in your early to mid 60s, we could loan you about 50% of the value, 50. Last year, when the rates were the highest, is for somebody that was 62, we were loaning less than 30%, like 29% of the value of your home. And so now, even though you could have done a reverse mortgage, say at the beginning of 2023 or early 2020 or late 2022, now you can't even get enough money to pay off your existing mortgage in 2023. Now, luckily, rates have come down. They've dropped about 1% over the last couple months. They're kind of flattening out. They bumped up a little this week. Hopefully they're staying kind of where they're at now. I think this week has been steady. So, but still, we don't know what the future holds. If you can get a reverse mortgage now to pay off your existing mortgage, and let's say that saves you $1,000 a month in principal and interest, you get out from under that $1,000 a month payment. That's going to save you $1,000 a month, $12,000 a year extra in your pocket. Now, remember, you still have to pay your own taxes and insurance, but if that money is the principal and interest payment of your mortgage and you can keep that in your pocket, that's a good deal. You say, well, yeah, but if rates come down, maybe I can get an extra $10 or $20 or $30,000. Yeah, but what if they don't? Then we can't even do that for you. But let's say they don't this year, and you just save that $12,000 this year. But next year, rates come back down. And we could refinance you, and the closing costs are a lot less when we refinance people. So we can refinance your loan and get you additional money, access to additional equity in your home. In my mind, if rates come down, what's going to happen is more people will qualify to buy homes. There's going to be more people who are willing to sell their home because they had this 3% mortgage, right? And they're like, I can't sell this house and go get a new mortgage at 7%. That's not going to work for me. But if rates come down to 5, well, that's much more palatable. So there's going to be more properties on the market. There's going to be more buyers on the market, and you're going to see the bidding again, and you're going to see property values go up. They're going to increase. So let's say that instead of loaning you now 33, 34, 35% of the value to today's rates, let's say, we could refinance your home and give you 40% of the value a year from now. But let's say that value has gone up from 450 to 500,000. Now we're able to really help you out. So you can refinance these reverse mortgages to access additional equity in your home. That's why you would do a reverse mortgage now, even though the rates are not ideal at this time. Okay? Because we don't know what's going to happen. I still listen to people who say, well, rates are staying higher for longer. There's people that are predicting, there might be this little bit of a downturn that we've had over the last couple of months, but they're going back up. And the whole thing is built on expectations. People are expecting that the Federal Reserve is going to lower rates, which affects the Treasury indexes, because that's how we calculate the interest rate for reverse mortgages, is by using the Treasury index. Okay, so that's how that works as far as why you should do it now if you can qualify. I think it's a great deal. Save yourself that extra money. What if your home needs repairs, though? You say, oh, man, my home stinks now, and it needs repairs. I got to paint. I've got these other issues. An appraiser is going to come out to look at your home. A lot of times, things like the paint, what we can do is we can set that money aside, and you have 6 months from the date of the closing to get those repairs done. If it's a health or safety issue, let's say that you don't have a handrail on the stairs going down to your basement. You have to have a handrail. That's a safety issue. You can install that handrail, and that's one of the benefits of having me come out and look at the home too. I can come out and I can show you, okay, this looks like a health or safety issue, or your roof leaked, and now maybe it's fixed, but there's this big brown patch on your ceiling. You can show, hey, this is where I got the roof repaired, the receipt. Then we're good. Okay, and maybe the appraiser might require you to paint that or to fix that drywall, which isn't a big deal. So depending on the situation, we can still do the loan for you. And then if you do the loan now, we pay off your existing mortgage and we refinance it after the repairs are done. The appraisal will be higher too at that point, regardless of if the market increases or not. So my name is Bruce Simmons. You've been listening to Reverse Mortgage Radio, and you can reach me directly at 303-467-7821. 303-467-7821 is my direct line, and I'd be happy to talk with you about your specific situation. You can also visit me online at reversemortgageradio.net. reversemortgageradio.net. This show will be up there on my website, on the podcast, under the Reverse Mortgage Radio tab on the upper right-hand corner next week. I look forward to talking with you. Hope you have a great week and stay warm.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821 or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.